The Ethical Investor, The Life, Philosophy, and Conscious Evolution of Guy Spiers. Good morning and welcome. In our extensive exploration of the financial world's master builders, we have studied titans who reshaped corporations, prophets who foresaw systemic collapses, and systematizers who codified winning formulas. Their stories are often defined by their external achievements, their track records, their legendary trades, their financial empires. Today, we turn our attention to an investor whose story is defined not just by his financial success, but by his profound and deliberate internal journey. He is a man who achieved remarkable investment, returns not by focusing solely on the numbers on a balance sheet, but by first focusing on the numbers of his own character, the architecture of his environment, and the calibration of his ethical compass. He is a student not only of financial statements, but of human psychology, moral philosophy, and the subtle art of designing a life conducive to both wisdom and wealth. His name is Guy Spiers. He is the founder of Aquamarine Capital, a Zurich-based investment partnership, and the author of the brilliant, disarmingly honest, and introspective memoir, The Education of a Value Investor. His story is a unique and compelling narrative of personal and professional reinvention. It is the story of a young man seduced by the false idols of Wall Street prestige who, through a series of painful crises and deliberate awakenings, consciously remade himself in the image of his heroes, and in the process discovered a more authentic, more sustainable, and ultimately more profitable path. His career offers a masterclass in the vital importance of aligning your investment process with your deepest values, the transformative power of a consciously designed environment, and the profound, often overlooked truth that to become a better investor, you must first and foremost commit to becoming a better, more integrated human being. Part 1. The Wrong Path. A Harvard MBA in the moral fog of Wall Street. To fully appreciate the depth and significance of Guy Spiers' transformation, one must first understand his starting point, which, by conventional standards, was the pinnacle of worldly success. Spiers was a child of privilege and intellect, educated at Oxford University, and subsequently earning his MBA from Harvard Business School, one of the world's most prestigious and powerful incubators for the global financial elite. Upon graduation in the early 1990s, he was effortlessly swept into the high-octane, high-status, high-ego world of investment banking on Wall Street. He landed a coveted job at the investment bank D.H. Blair, a firm that would later be described by the SEC as a boiler room and sanctioned for unethical, predatory practices. For a young, ambitious man armed with gold-plated credentials and a desire to prove himself, this environment was initially intoxicating. The money was staggering, more than he had ever imagined. He wore the right suits, worked in the right towers, and was on the fast track. He was surrounded by the glittering trappings of success. But beneath the polished surface, a deep unease took root. He saw, with increasing clarity, how the system was structurally rigged against the individual, retail investor. He witnessed the relentless pressure to push dubious, fee-generating deals onto unsuspecting clients. He felt the constant corrosive whisper to compromise his integrity for a bonus, a promotion, or simply to fit in with the tribe. He was, in his own poignant words, slowly becoming a person I didn't want to be, watching his moral self erode in exchange for financial and social currency. The pivotal breaking point came with his direct involvement in a specific deal, the underwriting of the initial public offering for a company called VIMRX Pharmaceuticals. The company was highly promotional, its science was speculative, and Spiers' own analysis raised deep, fundamental reservations. Yet, caught in the powerful momentum of the machine, the pressure from superiors, the allure of the fee, the fear of being seen as not a team player, he found himself rationalizing his participation. He employed the sophisticated mental gymnastics that bright people use to justify bad behavior. The IPO was a spectacular first-day pop, a phenomenon that enriched the insiders in the bank, but often left later public buyers holding the bag. Standing amid the backslapping and champagne toasts, Spiers felt not triumph, but a profound and isolating wave of shame. He knew, in his core, that he had been part of something fundamentally misaligned, something that created the illusion of value rather than recognizing its substance. He was making money, but he was losing his soul. This cognitive dissonance, the ever-widening gap between who he was acting as and who he truly wanted to be, became a psychological prison. It was the painful but necessary catalyst for his great escape. Part 2, The Awakening. Discovering Buffett and the power of a new paradigm. Spiers' salvation arrived not in the form of a new job offer, but in the form of a book. A friend, perhaps sensing his turmoil, gave him a copy of Roger Lowenstein's biography, Buffett, The Making of an American Capitalist. Reading about Warren Buffett's life, investment philosophy, and personal ethos was nothing short of a revelation. It was like a door swinging open into a sunlit, rational, and honorable world, a stark contrast to the dim, manipulative corridors he occupied. Here was a man who had achieved staggering historic wealth, not through financial engineering, exploiting information asymmetries, or pumping and dumping, but through sheer rationality, immense patience, unshakable integrity, and a fanatical focus on long-term intrinsic value. Buffett's principle struck Spiers with the force of absolute universal truth. The elegant idea of buying $1's worth of assets for 50 cents, the margin of safety. The empowering concept of a circle of competence, staying within the arena of what you truly understand. The liberating parable of Mr. Market as an emotionally manic, depressive business partner whose offers you are free to ignore. The emphasis on partnering with honest, capable, and aligned managers. This was a philosophy that was not only intellectually robust and demonstrably effective, but was also morally sound. It was a game where the rules rewarded patience, honesty, and rigorous thinking. It was a game he could play with his head held high, a game that didn't require him to check his ethics at the door. Inspired and armed with this new paradigm, Spiers made the bravest, most defining decision of his life. He walked away from his lucrative but soul-destroying job on Wall Street. In 1997, with a partner and a few $1 million in seed capital, painstakingly gathered from trusting friends and family, he founded Aquamarine Capital. The fund's name was a direct and deliberate tribute to Buffett. It was the name of Buffett's own first investment partnership. This was not just a business launch, it was a symbolic baptism, a public commitment to a new path rooted in value and virtue. However, the early years of Aquamarine revealed a critical lesson. Having the right map is not the same as being a skilled navigator. While he now intellectually subscribed to the right philosophy, he had not yet done the arduous internal work to fully embody it. He was, psychologically, still the same person, with the same ego, the same competitive triggers, the same hunger for external validation, just in a new, self-employed setting. He found himself making classic behavioral investing mistakes. He traded too frequently, reacting to short-term price movements. He felt the gnawing need to do something, to justify his existence. He compared his portfolio to others, falling into the trap of relative performance. He was, in his own analysis, intellectually a value investor, but emotionally and reflexively, he was still a product of the Wall Street casino. He realized a profound truth: knowing the right principles is not enough. You must systematically rewire your own brain, your habits, and your environment to live them. Part 3, The Reinvention. Consciously designing an environment for rationality and peace. Guy Spiers' most original and profound contribution to the art of investing is his intense, almost architectural focus on the context of decision-making. He came to understand, through painful experience, that his investment performance was not merely a function of his analytical skill, but was deeply, inextricably influenced by his environment, his daily habits, his social circle, and his prevailing psychological state. He therefore embarked on a deliberate, systematic, and lifelong process of redesigning his life to make himself a better investor and, fundamentally, a happier, more integrated person. This journey can be broken down into several key conscious shifts. First, the physical environment, the strategic retreat to Zurich. In 2008, Spiers made a radical geographic and professional decision. He moved himself, his family, and the headquarters of Aquamarine Capital from the frenetic, hyper-competitive, noise-saturated environment of New York City to the calm, orderly, and stable city of Zurich, Switzerland. This was not a lifestyle preference, it was a strategic maneuver for the mind. He recognized that the constant ambient noise of Wall Street, the cocktail party chatter of hot tips, the CNBC screens blaring in every office lobby, the palpable anxiety and greed, the social pressure to be seen as active and clever, was a toxic pollutant to his long-term decision-making process. Zurich offered anonymity, quiet, stability, and, most importantly, the mental space to think in decades, not days. It was a physical manifestation of the Buffett principle. The trick is to be fearful when others are greedy, and greedy when others are fearful. It is infinitely easier to be greedy when others are fearful when you are not physically surrounded by the fearful others. He built a moat around his own psychology. Second, the daily routine, the ritual cultivation of a calm mind. Spiers learned that willpower is a depletable resource. Instead of relying on it to resist distraction daily, he designed a routine that made distraction difficult. He meticulously crafted his daily schedule to minimize stress and maximize clarity and intentionality. He famously avoids checking stock prices or financial news first thing in the morning. He views this early exposure as a form of psychological poison, injecting him into Mr. Market's emotional roller coaster before he has even centered his own thoughts. Instead, his mornings are sacred, devoted to activities that ground him: exercise, meditation, reflective reading, often philosophy or biography, not finance, and unhurried time with his family. He structures his workday around large blocks of deep, uninterrupted thinking time, protecting it fiercely from the modern tyrannies of email and meetings. His office is not a trading floor. It is a sanctuary for rational thought. Third, the social environment, the curated brain trust, and the Buffett lunch. Spiers is a fervent evangelist for the power of your peer group, stating that you are the average of the 5 people you spend the most time with. He actively curates his social and professional circle. His most famous act in this regard was partnering with his friend Mohnish Pabrai to pay $650,100 in a charity auction for a private lunch with Warren Buffett. While the price tag made headlines, the true value, as Spiers articulates, was not in any stock tip. None were given or sought, but in the rare opportunity to absorb Buffett's character, temperament, and wisdom through proximity. It was a masterclass in how to be. More lastingly, it cemented his deep alliance with Pabrai. Spiers intentionally cultivated a small, global brain trust of intelligent, ethical, and supportive investors, a mastermind group with whom he could have utterly honest, challenging, and confidential conversations. This group acts as a sounding board to test ideas, a source of accountability to stay on the virtuous path, and a vital protective barrier against the insidious pull of wider market groupthink. Fourth, the psychological toolkit, systematizing against Lidolf. Spiers is brutally, refreshingly honest about his own psychological vulnerabilities, the desire for status, the fear of missing out, the tendency toward overconfidence. To combat these innate biases, he employs a series of practical, systematic tools. He uses investment checklists inspired by surgeon Atul Gawande's work to ensure he never skips a critical step in his analytical process, whether out of excitement or laziness. He practices inversion, a powerful mental model borrowed from the mathematician Carl Jacobi and championed by Charlie Munger. Instead of asking, "How can I make money on this investment?" he inverts the question to, "How could I lose all my money here?" and then works diligently to identify and avoid those pitfalls. He actively cultivates humility, openly discussing his mistakes in letters and talks, recognizing that an unexamined ego is the most dangerous liability in investing. Part 4. The Aquamarine Philosophy, Value Investing Through a Lens of Character. The investment philosophy of Aquamarine Capital is, in its essence, pure classic Graham and Dodd value investing, deeply filtered through the evolved lens of Buffett and Munger. However, Spiers' unique imprint is the profound emphasis on the human and character-based dimensions of executing this philosophy. The evolution from cigar butts to wonderful businesses. While early value investing was often about statistically cheap cigar butt stocks, poor businesses trading below their net asset value for one last puff. Spiers, following the later Buffett, emphasizes wonderful businesses at fair prices. He searches for companies with wide, durable economic moats, consistently high returns on capital, and critically honest, able, and shareholder-friendly management. He is willing to pay a reasonable, not just a cheap, price for exceptional quality and character, recognizing that a truly great business run by superb stewards compounds intrinsic value over decades, making the entry price less sensitive over the very long term. The art of intelligent inactivity, one of the hardest skills to master, which his entire environment supports, is patience as an active strategy. Speer understands that his job is not to be in constant motion, but to be in constant prepared readiness. He waits, sometimes for years, for the perfect pitch, that rare golden moment when a wonderful business he knows intimately is offered by a depressed Mr. Market at a truly compelling price. This requires immense emotional and professional discipline, which his Zurich sanctuary, his routine, and his checklists are all engineered to provide. The ethical filter as a risk management tool. For Speer, an investment decision is never a purely financial calculus. It is the initiation of a long-term partnership. He will not invest in a company if he does not fundamentally trust the character of the management or if the business model depends on practices he finds ethically dubious. He argues persuasively that this is not a moral luxury, but a core component of shrewd risk management. Businesses with poor ethics or opaque cultures are far more likely to encounter regulatory blowups, reputational catastrophes, fatal strategic missteps, and eventual collapse. His ethical screen is a pragmatic filter that systematically removes potential landmines from his portfolio. Part 5. The Enduring Legacy. The Integrated Life Guy. Speer's legacy is not a specific secret stock-picking formula or a legendary one-off trade. His legacy is a powerful, holistic, and living example of what it means to pursue a career in finance or any high-stakes field with integrity, self-awareness, and wisdom. His lessons are profound, practical, and universally applicable. 1. Consciously align your environment with your aspirations. Your surroundings are not a passive backdrop. They are an active, daily sculptor of your behavior and thinking. If you aspire to be a long-term, rational thinker, you must deliberately design an environment, geographic, digital, social, and routine-based, that supports and encourages that mode of being. You cannot think like a monk in the middle of a carnival. 2. The most important investment you make is in yourself. The ultimate asset you have is your own mind and character. Allocating time and resources to your psychological health, your intellectual education, and your ethical development will yield compounding returns that dwarf any single financial investment. A calm, rational, ethical, and learning-focused mind is the ultimate and rarest competitive advantage. 3. Integrity is not a limitation. It is a liberating filter. Making a conscious, non-negotiable commitment to ethical behavior does not shrink your opportunity set. It clearly defines and purifies it. It simplifies complex decisions, builds unshakable trust with partners, and acts as a powerful shield against the catastrophic, reputation-ending risks that lurk in morally ambiguous territories. It is the ultimate margin of safety for your career. 4. Your network is your neural network. The quality of the people you choose to learn from, confide in, and be challenged by will have an incalculable impact on the quality of your decisions and the trajectory of your life. Proactively cultivate a small circle of people who are wiser, more ethical, more supportive, and more intellectually rigorous than you are. Their influence will elevate you. 5. Define success on your own terms. Speer's entire journey is a quiet, powerful rebellion against the Wall Street and societal definition of success. The biggest bonus, the most visible deal, the most expensive symbols. He has painstakingly defined success on his own terms. Financial independence, not obscene wealth, geographic and temporal freedom, the luxury of deep, uninterrupted thought, the ability to be a present and engaged father and husband, and the profound peace of mind that comes from knowing his actions are aligned with his values. This is his compounded return. In conclusion, Guy Spiers stands as the philosopher king, the thoughtful architect of the modern value investing world. He has demonstrated, through the living experiment of his own life, that the pursuit of wealth and the pursuit of wisdom, far from being contradictory, are powerfully synergistic. He is a living testament to the profound idea that the long-term compounding of character is even more valuable and enduring than the compounding of capital. His journey from the moral fog of Wall Street to the tranquil, purposeful, and principled life he has built in Zurich is a beacon for anyone in finance or in any ambitious endeavor who seeks to achieve meaningful success without sacrificing their soul. He teaches us, above all, that the ultimate, most rewarding investment of all is the one we make, day by day, in consciously becoming the best version of ourselves. Thank you.